Great afternoon, everyone, and welcome to the Trading with OC show. Hopefully, you guys are doing fantastic, phenomenal. Let me see if I can just get this out of the way. Perfect. So a couple of things. So today was a great day for trading. We played out very nicely. We got one hit, one breaking even, and then the final BNB breaking down very, very nicely. So let me get started with you guys because you guys are amazing. I can't believe that you guys, especially Jesse, 2 a.m. in the morning, still staying awake for the show. Thank you very much, my friend. Really appreciate it. From the bottom of my heart, I appreciate your presence here and also you stopping by to say hello and also drop that like button. So let's get started with you, my friend. Jesse, what is up, my friend? Welcome. Hopefully you have a great night's sleep and you wake up tomorrow very nice and rested. So week wife, what is up? Welcome to the show. Who else we got in here? We have Caliphant. What is up, Caliphant? We have a very nice chat today in the session of Piper Academy session. So the AMA, and we looked at a couple of stuff. We're gonna go over those, and then we're gonna be analyzing the topic of today. By the way, today volume indicators, advanced setup, and we're gonna be seeing how using them, and also a couple of tips and tricks. So what is up, guys? Remember to hit that like, share it with your friends, and let's get it, guys. Let's go to the charts. All right, guys, so we are right here on the side chat. Let me know if you guys have any question. Let me just fix this because it looks weird, me looking the other way around. Let me see if I can, let's see, transform. Maybe oh the other way around. All right, let me see, transform, and then, oh, come on, you gotta be kidding me. This is it, finally. Now it looks like I'm not looking away. All right, so let's do it. Was so helpful today. Thank you, my friend. Thank you, Caliphant, for the heads up in there. We went over a couple of trades and also explaining when and how are we either bearish or bullish depending on what's going on in the markets, and when we decide when to start changing of opinion. So let's get started with let's just say BNB. All right, that was the best setup that we gave today, right? So we were looking at this moving to the upside, possible this moving to the upside. We have possible a bottom here. We were breaking through. We already have a reversal, and then we were looking for that retracement. We had that beautiful retracement, and then what happened? We hit our first target. Let's bring up chunky candles in the house in here just to take a look at such a better setup in here. So basically we enter here, it went all the way down there. Look at the wick. Let me just get rid of my spaghetti. Look at that wick in here very nicely. I was not able to take some profits, so I waited all the way up here, getting nervous, not gonna lie, then reverse once again, and as soon as I hit dynamic reactor, well, you guessed it, basically jumped in that trade. 1 second here, thanks so much. And then TP number one. What do we do after TP number one? Well, we move our stop to entry. I'm not gonna be doing it right now because it's gonna mess up the setup in here, so let's just leave it as is. So 50% out, we're still 50% in here. And what could happen in this case? So what am I holding it and not letting go? And that is because of Bitcoin. So let's take a look at first what is the structure here, right? So we have a breakout, we were flagging out, or we are flagging out, all right? We could also be within a range, and how do we define this range? Well, then we have some support and resistances here, right? So what do? We wait for the retracement. It's not about the breakout. Perfect. It's about your retest, your entry, and off we go. And we rinse and repeat, all right? So basically, this is what we were looking at, or a little bit higher here. So it did not quite hit our target. Breaking up, all right? Going for a short, going for a long, and then trading the range. I see Jay Violet in the house. Also, I see Charles S. What's up? Want to go get chart from? Which one would you say I need, the Pro or the Plus? Whichever you like, my friend. If it's your first time, I would say first go with the Pro and then upgrade. But also, if you want to dive in within the indicators, I would recommend going to my channel. So let me show you really quick. Let's go to YouTube. All right. And then over YouTube, let's see, we have OC Guy. Here it is, the OC Guy. And then you're gonna see that I always post some videos. If you go to videos, you're gonna be seeing how I use the Pro and Plus, all right? I also have a couple of playlists. Let's go for those playlists. And I want you guys to notice the live classes. Where are the live classes, all right? So let me just mute this. Sorry for that. Let's mute it. And then you'll see the last class in here, my 20th. Oh man, I'm still missing a couple of those. I always try to uploading. I don't know why they haven't been uploading. They used to be automated. I need to look into it, right? So right here, you're gonna be seeing how I use the Pro version and also the Plus version. Just take a look at how I trade with those. And I mean, you can feel free to comment down right down here or whatever you like. And then based on what you see here, you can take a better approach, all right? I don't want you to spend money in something that you're not gonna be taking the full advantage of, right? But also, I don't want you to spend money and then say, you know what, I should have got it because it's just so cool, right? Or works that well for me that, I mean, it was a waste of money not to get it from the beginning. So it's hard for me to recommend to you kind of like out of the blue, right? But go check out the classes. I always share them, see how I use the indicators, and of course, take your own decision in there. Another thing that I can advise you on is, again, we have a setup guiding here. So if we go right now to the Piper Academy, you'll see that I have, let's go to playlist. In our playlist, we have Trade Academy, all right? Over Trade Academy, this is, of course, our right now class, but let's go over, I don't know, all of the chapters in here, right? I want you to notice that when we change, there we go. Here is live trading lessons setup. We started with no indicators. We have first 1, 2, 3, 4 classes, all right? With to get started. So just looking at a couple of setups, just looking at how we trade overall, familiarizing with names and things, and then we go with well, please delete, should be deleted, chapter 9, naked charts. All right, so this is where we start actually trading, learning how to trade without no indicators, just looking at the price action, just looking at the indicators structure, so on and so forth. Then we're talking about the oscillator, so on and so forth, right? And then you're gonna get somewhere around here where I change my image. Chapter 8, triangles. A little bit before, I would say, the recap, confidence and risk management. Right? I would say somewhere around here, not quite 100% sure, not quite sure about this. Let's see. Yep. At this point, we're going to be seeing how to add indicators, all right? So once again, you don't need to go all pay indicators. In fact, let me show it to you. Let me show you like what we got in here. Let's change it, right? And let's go right here with trading with OC, the setup in here. And also let's change this again with trade with OC. Let me show you that I have both paid Market Oracle Pro Plus, right? Market Oscillator Pro, not the Plus, and then free indicators in here, like the VPVR, like the market, like, where is it? Come on. Like my linear regression oscillator, like the RSI Prime. I mean, and we've been trading with free indicators all along. So we make a mash up. So if you're not ready maybe to jump into a paywall or something like that, go for these indicators first, start looking at how things work, watch these classes and take advantage of those, right? Also, quick reminder, if this is your first time, you can check out the link in the description. It gives you 40% discount on your first monthly subscription, all right? So there's all of your options for you, my friend. I want you to be informed before you commit to something, all right? So other than that, let's get it, shall we? All right, Charles says, my pleasure. Let's see, oh sweet, what are we talking about here? Not sure. All right, am I missing somebody else? I think that's it. So let's, okay, DGT, yes, I was almost missing you, my friend. KDG, welcome, my friend. Welcome. J Violet, and thank you, Charles. Thank you, my pleasure. So I mean, always count with my best advice when you ask me for, you know, like a friendly advice, right? Not financial advice. And that is because I always wanted to have, you know, somebody that tells me straight out truth and lay out the options, right? So yeah, the point is for you to make some money. So let me go back a little bit, right? Let's go with here in, ooh, let's save this. Let's go back and see. Yeah, I'll open anyway. I don't care. Whatever. And this is one of the trades that we took. All right. It looks very nice. All right. We have a breakout retest. Off we go. We're having an indecision candle, big wick below. I think we can still go upwards. But I want you to notice that when we're starting to hit some peaks in here and having that flip of the ribbon, we're not actually making a new higher, right? So what's going on in here? Are we going to finally burst through? Are we going to stay in there? Well, first of all, I want to take on previous highs. Let me hide everything that I have in here for a second. And what is my meaningful high? Well, I have a high in here, I have a high here, another high, another high, another high, and a little bit of a lower high. So I can average down those highs to a support or resistance area. Take a look at the areas where, or the chapter where we talk about support and resistances. And one way to create your own support and resistance, it is going for an average zone, right? Not the very tippy top, but also we can look at, for example, this one here slightly above because this one is highly below, right? So the point is that we go across as many candles as we can, but at the top of those outstanding candles, if that makes sense, right? We're trying to grasp that top of those candles, but as many as we can, all right? So the trick in here, it is that I'm not going bullish, right? And I am bullish, by the way. I'm bullish. Why? Because look at my prime score. By the way, this is the lazy way to look at if you're bullish or bearish, all right? On your time frame, because this is time frame dependent, just so you know. All right. Laser go pew pew. What is up, my friend? Welcome to the show. All right, so I'm not going to maybe a long at this point unless I see breakout of meaningful highs in here, right? Areas where we see rejection. All right, maybe going all the way up, maybe going somewhere around here. We're taking previous important highs, going back down. My entry, as long as I'm above zero line, having that flip of the ribbon, and then off I go. All right, I mean, this one's still going in case we are making just a upwards channel. If you remember when we talked about channels, usually the upward channel tend to break to the upside more often than not. All right, so that's why I'm keeping 50% of my trade open here. I already have taken profits. My stop loss is already at entry, so I have nothing to lose in here, right? And then, well, then if I have nothing to lose, I'm gonna be risking it on the next possible either breakout retest. All right, but so far we're bullish in here. We're still bullish, but we're tracing the retrace, or we're trading the retracement. And let me show you something interesting. Let me clear this up. All right, let's just get rid of this. Let's go to daily, double click, and let me show you that right here it kind of, all right, it kind of looks like this to me, or looks like this to me. Does that make sense? Yeah, I know this is a beautiful bullish flag. We have a breakout retest, but I just don't see the actual momentum candles, right? I just don't see it. I see a bearish divergence, all right? Bearish divergence already played out. Big secret to the downside. I'm in the red cloud. Usually red clouds means what? That we are, the most immediate movement should be bearish until we get into the green cloud. But what happens if we just continue here? Maybe I could be looking for this flip of the ribbon. Where is that ribbon going to be at? Remember, always zoom out, zoom out, zoom out. Look at that, I cannot farther go away, right? Or I cannot go farther out, right? So at this point, now that I've zoomed out, I am seeing whatever is in here, right? And now I'm gonna be zooming just slightly in to start seeing what do I see, or what do I can grasp out of here, right? The first thing I'm gonna go are gonna be trend lines. There we go. This is a trend line. All right, perfect. 2 points, not 3 points, but all right, perfect. That's all right. I have a high in here with 2 touches. All right, not only that, breakout retest, off we go, perfect. But also I see this high, and this high. I think this is gonna be a stronger trend line, or in this case, rising wedge. Why? Because if I clone this, you'll see that they're not quite exactly the same, right? But either channel or broadening wedge, whatever you like, right? I mean, at the end of it all, I'm here to tell you that it doesn't really matter. What matters, the goal within these patterns, it's in the boundary lines, all right? So, buddy, good evening. Oh, good evening, my friend. Welcome. Who else we have? Laser go pew pew. What's up, my friend? Welcome, fam. All right. So what else, or what are we looking at this point? We're turning bullish. Perfect. Look at our consolidation score. It's high, almost about to break out. All right, so that's important. What kind of consolidation we're going to be breaking out? Well, the last consolidation that we can measure right here. Is it going to be breaking up or down? This is not telling you, but this is giving you a hint. Another hint, it is, are we above or below dynamic reactor on the daily? All right. Maybe you don't want to wait for days, because on the daily, one retracement like this, let's point it out, in the 15 minutes, it is like a huge trade, right? Look at that. I mean, let's go over, look at that trade, right? All the way from on top, from down here. And maybe we don't get the proportions all right. Let me just double click in here. And look at that. We're going to be looking like a swing trade down, right? From here to even lower, so somewhere around there, right? So as you can see, that might be something that you don't want to miss, right? So that's why, depending on your time frame, you're gonna be looking for possible trades. So far in the 15 minutes, we also see a rounded top. That's not cool, and a rising, maybe a trend line in here, right? Which again, if we are flagging up, this usually breaks out, retest, up we go, maybe going on some interest zones. So do we have? Well, we have a quantum reactor coming in strong. What else? We have some support, trend line, support. And as you can see, I'm just going over my indicators and drawing lines, right? I can even go, what is this? I don't know and I don't care. Let's just draw it, right? So look at that, the center of maybe an order block, so on and so forth, a support zone. All right. What else we have here? Oh, nice, mother's milk, somewhere around here, starting that range. Something median. And at the very bottom, our catching knife strategy. All right, so I think that's basically it. I know we have a mess, right? I know, I get it. But right here, we can start looking at where things start getting, where we start having that confluence, right? So right away, I see 3 lines in here, right? So maybe I can go grab this thing, make a box, and get rid of those lines, right? Easy peasy. Where else? Well, I have a line in here. I have another line in here. So these are 2 lines, and then other 3 lines in here. So the next box I'm going to be drawing is going to be right here for another 3 lines, right? And finally, my last box, which is going to be right here. Perfect. So those are supports because they are below the price action, right? For me, everything is a resistance, because having resistance to go down, I mean, it's just the same as support, right? It's just making some resistance throughout your movement. All right. So now that we have that, well then, are we bullish or bearish? We're bullish. We should be looking for longs, all right? But I mean, we have some bearish structure here. So here's the thing. And I want to go over this because this is the same overall topic that we talked about with Califan today, right? So how do you know then, right? For one part, on the 15 minutes, you are crazy bullish. But then for the other part, you have a rounded top. So, I mean, do they cancel each other? Do I just don't take a trade? Or how does that play out? Do I just long now? Do I short it now? I mean, what do I do, right? First of all, keep it calm, right? If your entry is already gone, it's already gone. Don't worry about it. Like, for example, this is a peak. So my entry for a short, it's gone. Perfect, it's gone. Can I analyze for where that entry played out? At this point, not really, and I'm not that interested. I rather play out something that I can see. And what my eyes can see is this trend line, and of course, this other trend line. All right, perfect. That's it. So what do I do? As long as I have flip of the ribbon at some support, well then I'm gonna be longing it. All right. Be careful, because I want to show you something that did not play out for me recently, but I'll show you in a bit. First of all, also I want to show you that where is my next support? Where's my dynamic reactor and where's my line? So I have a big area here in which I can go maybe breakout, retest, and off we go. So I need to be a little bit careful in here. All right. I usually gonna be looking at where is my oscillator. let me show you. Is my oscillator above the zero line? Usually I see a price action going up. If my ribbon, it is below the zero line, I usually see my price action going downwards. You see that? Up, of course, up, down below, down below. Easy peasy, isn't it? So far I'm above. So I'm gonna still kind of like going for the long. If I lose my zero line in here, I'm gonna try to grab that loose of that zero line, run my support. I'm gonna be looking for flip of the ribbon. If I have that flip of the ribbon, I long it till where? Till my next resistance right here, and I close it. Then am I rejecting? Yes. So I enter for the next continuation to my next support. You see that? And then you just rinse and repeat, rinse and repeat, rinse and repeat. Perfect. All right. Having said that, let's go over and take a look at something differently. Sometimes we need to take that leap of faith based on our strategy. Remember, if you don't feel confident, you can do something here. Like, for example, I can go here. Let's just long it from, where is it right now? I would have put my stop loss here, and then I do not take this straight. Let me actually cross it, all right? And that, hey, Retro Mike, what is up, brother? Welcome, my friend. Happy to see you. All right, so this is because this for me might be just a proof of concept, all right? I'm gonna then go away, and then when I come back, I'm gonna see if that result, if that should have done something differently, and this is how you build up your confidence. But let me show you something that happened to me, all right? We need to go right here, and then we need to visit first Ethereum, because Ethereum played out very, very nicely, all right? So that was a good one. That was a win. The next one, it is Litecoin. Let it load. And I think I deleted it already because I think, we deleted it, didn't we? California, I believe so, right? Yeah, on the explanation, I think we deleted it. So it was at the 15 minutes. Yep. I was looking like a megaphone, right? So I was expecting a possible long in here at this support because I see this flip of the ribbon and it was, hey, yeah, I think look at those wicks, right? So I have dynamic reactor, I have flip of the ribbon, right? I'm almost about to break through, right? So, I mean, maybe, do I have something else? Yeah, look at that. I have money flow POC. What else did I had? I think I had a order block, didn't I? I don't quite remember. I think there was an order block there. Well, it was the bottom part of the mother's milk, right? So there's another support, right? So is this looking strong? Of course it's looking strong, right? So what I did in here is, all right, let's go for a long right there at my support. And then stop loss at previous lows in here, right? So previous lows. And then that was basically it because it was somewhere around here. And then I was aiming to previous highs or maybe a little bit below, somewhere like that, right? What happened in here, it is usually I give myself this wiggle room in case I have a breakout retest. I close it very close to my zero entry or even at profits, and then a head switch, and off we go. But as you can see, that the them thing did not even react to my support, right? And sometimes that happens. I mean, big body candle going through. Usually that tells me that I'm gonna have a big breakout, right? This is a confirmed breakout. I was actually expecting to have one candle retracement to get out, but that did not play out. Something important that happened here, this was half of a position. Remember, when you're not that confident, you can play it with your position sizing, all right? So I just wanted to tell you that. And why did I was looking at that? Because usually this is an upraising either channel or megaphone. In this case, usually we break to the downside. I was not expecting such a big breakout, but it did happen, right? I was actually trying to go a little bit cautious in here and maybe go, you know what, maybe can go for breakout retest, even close it in here, right? And then off we go, something around those areas, but did not play it out, stop me out, and that's fine. All right, that's to show you guys that even you can have a very strong support, which again, let me add something to it. Look at the thickness of your dynamic reactor, right? Usually when the thickness is big and chunky, yes, we could be breaking out. When we break out, we hold it because it's chunky here, we push, so it becomes support. Thin dynamic reactor usually becomes weakness or weak support, if that makes sense, all right? Let me clear this up. There we go. So what now? I have a loss, perfect. And we were talking about this with Elephant. Look at this, because we have a lot of this pattern going down, flagging out, and this is a bearish flag, breakout, retest. You see that beautiful retest, and off we go as we speak. Yes, bullish divergence, higher low, which means maybe I should not be going that far away. Do I have some maybe support? Oh yeah. So where could maybe I could start aiming for? Right here, or even right here. Well, this is a little bit too much, right? Maybe my next possible trade is gonna be somewhere around here. But here's the trick, all right? The trick is, look at your structure, man. I mean, for example, in here, look at how beautiful of a trend line we had, all right? So I can even go and try to be a little more accurate. I think this will be it. There we go, right? And what do I have? I have sweep of the lows, all right? Higher low, breakout, support, retest, taking previous highs. Your entry, breakout, retest, your secondary chance for entry. We are already above the zero line. In fact, where do we break above? Right here. You see that? So you have 1, 2, 3, 4 candles, then one retest, then another retest, right? So you have 3 chances to jump in. But at the cost of not really knowing. You're never gonna know, all right? You're never gonna know. You can have higher confidence into the trade, lower confidence into the trade, but there's something that's always gonna be there, the slight possibility. And this is something that we talked about with Elephant, right? Like, if you don't know, then how do you counteract this? Well, then you counteract not knowing by having a plan B. Let's go and check out my plan B, for example, in this case, right? Let me just clear this up. In here, just as naked as we can be here, right? As less of a, I don't know, indicators, right? I see a flag, flagging out, breakout, retest, off we go. I'm bouncing down in here, all right? My speculation will be losing my support. I see a clean and clear support right here. Look at that. All right, perfect. What's up in here? Maybe I can go, and I wouldn't recommend this though, but let's just imagine that we're gonna do a long position. I see a support zone in here. All right, then I give myself a wiggle room, perfect, and I aim to previous highs. How is my my risk reward ratio? 1. All right, maybe I can go with that. What happens if this goes the other way around? Well, then in this case, where is my support? All right, I see a support zone in here. So I can do 2 things. 1, let's just get rid of this. I can, instead of going with 1 full position, I can do 1/2 of a position. And then maybe add another half of a position. Maybe. What happens is that if I get to into this area, well, then I'm going to be averaging down my entry here. All right. Not only that, I might be able to bounce in here, go to this area. All right. And then if that is a rejection zone, in the worst case scenario, all right, remember that's why we're looking at plan C. Look at where I could be closing my trade, right? So I can do TP number 1 in here, move my stop to entry, right? And then even though the price action goes lower, all right, or reverses on me, I could have a chance to close it at profits. That's why it's very, very, very important to always have early profits, because you don't know when the market's going to act differently of what your analysis is telling you, right? It is very, very important that you consider the point or the perspective that you might not be looking at the things the right way, or you are an expert, you're looking at things the way that it should be looked at, but there's somebody manipulating the price, all right? So either way, have a plan B, all right? Let's go and then clear this up. My entry, by the way, is gone until I see whatever support breakout having a rejection here, and then this is a short, all right? And this is a long. Let's see. We already kind of like know where is it, somewhere around, right? So this, so far. Until, and this is what I tell you, look at the structure. Until I start seeing, let's bring this up once again. What is that? This is a beautiful trend line. All right, let's do that trend line. Perfect. Until, let's just shut this down. I see maybe a double bottom and then movement to the upside, maybe even a little bit of a retracement, breakout, taking meaningful highs. So above my next entry for the short, retracement, and then where is going to be my retracement? At the next support, all right? And then when I see this retracement, it is because I'm going to be going up and then maybe holding this zone. And then off I go with a long. All right, and dynamic reactor should be doing something like that. You see how am I looking for bottoming patterns in here? What would the bottoming pattern be? Maybe a double bottom, right? Something like look like this, right? Neckline breakout, breakout retest, take your TP number 1, move your stop to entry, rejection. Too bad. You tried it. Perfect. But you still move your stop to entry. Remember that, or you see how that goes? What happens here? Once again, double bottom, right? Breakout neckline, breakout retest, off we go. Ooh, it took you out, bro. Well, that happens, right? But if you're making a higher high and then, higher low and then a higher high in here, all right? Breakout retest, your next re-entry, right? Off you go. And boom shakalaka, you just not only recover this itty bitty tiny stop loss, you make a beautiful, I don't know, what was that? 3%, 4%? I don't know, let's even count it here. 1.5% here, 1.9%. In what are you using? Maybe, I don't know, a 10x, not too crazy. I don't advise you use a leverage, but I do use it. So that will be a 19.2%. Right? Perfect. All right. Let's just wrap this up. Let's just finish it up and let's talk about volume indicators, right? Not yesterday, what was it? Friday, if I'm not mistaken, we looked at the VPVR or the RVP, right? And also I showed you that you can use another one if you don't have premium. You can use another one, which was, where was it? Come on, I always lose it. Here is the fixed range volume profile right here. All right, 1, 2, 3, 4, 5th. Down below, you click the little arrow drop down menu, and then you go to fixed range profile. In this case, it doesn't matter if you click at the top and then at the bottom. It doesn't matter. The point is that you give it. Look at that. It doesn't matter, right? The point is that you use the section. So the first part is at the section where you want to start measuring that volume. So we know that volume. Perfect. We already know how to use it, essentially. All right. I love the VRPP. So do I. So do I. And remember that at this point, I talked about having enough definition, right? So what is that? Enough candles to give you these nice peaks, all right? But for me, there is a sweet spot because right here, I mean, come on, is it? How many peaks do we have in here? I mean, one clean and clear one. Is this another one? or is this 2, or is it 3, or is this just a part of this one? I mean, if this is not a peak, it's just a part of downtrend, and then maybe an outstanding movement, and then I have the next one. I mean, I don't know, man. For me, it doesn't make that much of sense, right? So I want to have something that makes sense. First of all, I'm not gonna panic, all right? That's why I have different tools. The next thing, and remember, is that you can adjust your row size. I can even increase it. Let's go to 2,000. All right, so let's see, let's click OK. And I think that basically gave me that much more and should be giving me more bars per zone. Did it actually did something for me? Not really. So let's go the opposite way. What if I go to 20? All right, now I can start deciding which one I'm going to be looking for. Just remember that you're using definition in here, but you're trading definition for a better area of entry, if that makes sense. All right. So you're, let me rephrase that, please. All right. So it's not a better area of entry, but a more defined chunky zone. All right. So for example, in this case, I can see this one is outstanding, slightly bit, right? So it go low and then high. All right. Perfect. Then this one is outstanding. And also have that little white thing, right? And then I see, all right, which one is other outstanding right there. Let's see how that compares to, and by the way, do not be afraid of change this. For example, look at that. 23 makes much more sense. And I guarantee you the 50, because I already know, 50 or 30 are gonna make much more sense to me. All right, so maybe look at that. Maybe I can even go slow, I mean, not slower, but there we go, more precise, right? There we go. Perfect. So, Hugo's Tar, what's up, buddy? Hugo's Tar, risk management, only use 10x leverage to manage up margin, keeps capital open. I don't know, man. By the way, open for debate, right? Open for debate. Completely, I do respect that comment. But when I started at 3x. Well, when I started at 50, all right? And I understand fast that that's not gonna be lasting for me, all right? And then I started reducing 20, a little bit better, right? As I started learning. And then I just ended up going in twice. And let me give you this example, like real life. When you get, because at the end of it all, having leverage, it is a loan based on your capital, right? In real life, how do you get usually a loan? Based on your assets. Your house is an asset, right? That loan, it's called a mortgage, right? How many times the value of your house you get on your on a mortgage? Let me know. I'm interested to see how that changes throughout the world in different countries. Let me know. Where are you from? 400x always. Yeah, right. So, yeah, let me know. So, all right. Remember, you can do 1, 2 mortgages, right, on your house, maybe, right? But that is kind of like a 2x on your asset, right? So I usually stay between 2x and 3x. Right? And in the meantime, I start, kind of like developing my strategy, doing better, so on and so forth. So depends on your style, depends on your time frame, all right? Because I mean, the lower the time frame usually makes a little bit more sense to go slightly higher on leverage. Not always, because the higher the leverage, the more you have to pay back, all right? The higher the interest, just so you know, all right? So when you start trading the 5 minutes, when you start trading the 2 minutes, your leverage needs to be tip-top calculated, bro. Because, and I'm not saying bro, you my friend, but just as a bro, right? Because sometimes you can get, a very nice, 10%, 2%, 5% gains, and because of the fees of your leverage, you still ended up losing money, right? So, but once again, I am, my base leverage is 10x. So completely respect that I actually do it, right? But just want to put that out there since this is YouTube. There's going to be many people maybe watching it in the future. So I just want to go over that specific point of view, all right? But thank you for bringing that up, my friend. Really appreciate it. All right, so what other thing I can use, or a thing I can use as a volume now that we have this, right? Well, I do have a secret weapon here. My first secret weapon, it is your dynamic reactor. Yeah, your dynamic reactor is a volume indicator, if you didn't know. Don't worry, if you don't have dynamic reactor, kind of like a who cares, right? It's better, but I already showed you that in here, in our SMA combo, which I believe that was class chapter number 2, we created an SMA that mimics very closely on the areas of importance, right? Our volume reactor, with our dynamic reactor, which is a volume-based indicator, all right? Looked at that because of the way that a SMA works, right? It doesn't measure volume, measure average price, right? Average closing price in this case. So depending on how or where that average price, usually it plays out very, very nicely. Look at that, to your dynamic reactor. Yes, we have some gaps, and those gaps for me, those are called, or I call them opportunity zones. All right, so there we go. Look at that. And when they mostly need it, look at that, they usually very, very nicely coexist to each other. You see that? So when they both get together, well then, boom shakalaka. If you don't have, and look at how they both now are going here. So gold, guys, possible retracement. Where to? Both of those areas with soft order block, with money flow POC. All right, I don't know, we'll see. Let's even add an alert in there. All right, let's add this alert, and let's call it nailed it. This thing is just taking forever. Where's my alert, man? Oh, well, it was there. All right, nailed it. Can I change the name? Symbol coordinate price value, right? And then trigger exploration. What? Message. Nailed it. Oh, I know, it's perfect. There you go. And then maybe we can go higher in here, and then boo. Let's call it boo. Baby, it did not play out as we intended, right? Boo. Perfect. Whatever. We'll see how that plays out, right? But the important part is that if you don't have dynamic reactor, which is a volume, another substitution for that possible volume, it is your SMA combo. Just giving you alternative in here, all right? Let's just clear this up. Another thing, let's go to Bitcoin, because I'm interested to see Bitcoin in this chart. There we go. This is what I was predicting. Remember, area breakout. So did we break out, guys? I mean, it actually played out faster than I was expecting, right? Where to? Dynamic reactor. Did we got there? Not in here, but this could be, and I think it is a dead cat bounce. Remember that? Let me bring it up in here. 1 second. Dead cat bounce. All right. Now that we have searched it, there we go. Just so you can see that I'm searching it. Let's go to image. And that is it. You see a lower high with enough momentum to trap bulls, right? This is a little bit more of how a dead cat bounce look like. Let's go into all, because I saw a very nice, there we go. Look at this dead cat bounce that has been droning here, right? So going down, dead cat bounce, and then lower. You see that? Where's your confluence point? Right there. Perfect. All right. So what other volume could we be using for if we don't have, or if we have dynamic reactor, or in the worst case scenario, if we're just using our SMA? Well, then right here we can do our volume profile. So just for good measure, let's go all the way down to all the way up. I usually like to go back in time in here to the previous highs, just to give me an overall perspective. Where do I have those supports? Look at that. Where is it peaking? You see, very nice chunky candle in here. Although, remember, it doesn't matter. If you want to go to 300, go for 300, man. Right? Who's telling you not to? But in this case, look at that. We have this one here, this one here, this one here. So in my case, since I'm kind of like an obsessive and compulsive, man, this doesn't play out for me, man. I mean, I do 200 just because that's how I learned to use this one. But if I turn on this other one, let's go to a least spaghetti-ish zone. All right, let me clear this up. All right, and let's bring up this in here. Look at this. This is chart prime. This is a paid indicator, just so you know. It's part of the Market Dynamics Pro, but this is my cheat code. All right, and now I don't have a one-to-one free indicator for this one. All right, and neither a comparable accurate indicator at this one. The other one that you can use is just a regular VPVR. All right, but the point in here, and let me show you. Look at how in one VPVR, which is this one, I use it with somewhere around 300, all right? But since I get a little bit too picky about this, right, and that's also sometimes fine because look at this little itty bitty area, which matches with my predicted ranges, all right? Well then, I can do the opposite. Let's shoot. I do 200, all right, perfect. Then I go chunky here. How chunky? I always changing depending on the size, all right? So that is gonna be fine for me. I don't really care. So let's go for volume profile. All right, profile levels, 50 in this case. Let's go for 20. Click away. Let's see how that plays out. If that it's something that my brain likes, much better. All right. And let's click OK. And right here to your right, you're gonna have raw volume. This raw volume, it's almost, not quite, almost exactly the same as this one. Well, it is not exactly the same as that one. It is, well, it is more like, well, it is exactly at, almost exactly at this one. But here's the thing. If I double click in here, and this is the one that I want to show you, it's just inverted, if that makes sense. I can go to volume profile and then turn on profile background, right? I'm not gonna do it, well, let's do it. Let me turn it off. And then first I want to do a reference. Remember how we measure where, or how we said where are we gonna start measuring? From which point, right? Maybe from this candle to this candle, maybe, all right? So that give us X amount of candles that is gonna be analyzed, all right? Let's just remove that for the sake of not making a mess. And now you'll see that I have something like that box, but the other way around, if that makes sense. So this is telling me that from the last candle to X amount of candles right here. How many candles there are? We set it up to be, where is it? Profile length, 250 candles back. All right. So maybe I can go hard back farther. Maybe I can do. By the way, I never changed this. This is just the way that it's set, and I like it like that. All right. Sometimes in very specific zones, I might be changing this just to grab a little more volume backgrounds. Let's go for, I don't know, 1,000 candles. All right. Let's click away. Let's wait for this eye to stop moving, and then let's see how this box grows. Let me just clear this out of the way, and it measures all the way here to the 1,000 candles. In this case, I might be just either keep it, right, or leave it as is. I'm measuring this, or I'm doing this kind of profile because I want to do the same thing with my profile in here, just so you see the difference. There we go. Look at how, and maybe I can even go, instead of 20 levels, I can go for the 200 levels. This is not something I'm going to be doing to my right, by the way. Let's just wait. And you see why? First of all, because of the amount of information. But if I go to the volume and I would need to zoom in a lot, no, I wouldn't be able to. I start getting a little bit messy. All right, but let me fix that. Let's go, not that bananas. I don't know, let's do 70. Click away. Let's wait for it. All right, still cannot read that much, but if I start zooming in, I will be able to. All right. Remember, I can also change this, for example, detail levels, delta, and money data. These are the numbers, so I can see the actual profile. But I like to see the numbers, and I'll show you why in a minute, because it just gives me a relationship. All right. Nonetheless, you see that I have the same overall profile here that I have in here. As you can see, is the same data. All right. So this is a little bit more stretched out, and this is more compact. Let me go and then just Control C this, because I do want the data being showed. Not really all of the data, but some of the data. We'll see that in a second. In the meantime, let's go back to 20. Right. In this case, 20 is too chunky for me. Why? Because at this point, I cannot see maybe a well-defined zone, maybe just too chunky, slightly bit too chunky, right? Why? Because I have these two areas where, I mean, come on, where do I set my reversal? Well, I do know where my dynamic reactor is going to be, matching the bigger pole, right? So, let me just get rid of this, and then let's go somewhere around here. Instead of 20, let's go 30 levels. All right. I think this is going to be a much better perspective. You'll see. All right, perfect. So now can you see how things are changing now? Right here, predictive range, dynamic reactor, first area for possible bounce, second area now for a possible re-entry, as I have maybe, wait, hold on. Small peak performance for the reversal. And then peak performance in here for this reversal. Off we go to the upside. All right. Easy peasy, lemon squeezy. Drew, what's up, bro? Welcome, my friend. All right. So this is how to use the VPVR in this case. Something important, because I'm talking about this volume in here and not really about this volume. All right. What I like the data to be there. Maybe I can just turn it off, right? But I'll look for something that matches with my brain. Something important. Let me just clear this up, everything. Something that I absolutely am going to be just turning off. It's going to be the background thing here. So what is it? Background. Yes, please turn it off. All right. So to my right, I have raw volume. Important. The bar size depends on the volume that is allocated. You also will see a yellow number. That yellow number, it is where volume is being allocated right now as we speak, right? So most likely, let me try to go, because I don't see that we have many movements. Let's go to 1 minute. Let's wait for that VPVR. There we go. Oh, come on. Don't tell me that this is stationary also at the 1 minute. You gotta be kidding me. Yeah, it's not. Oh, there we go. You see how that jumps from one level to another level? Not only that, look at that, how the number itself changes. 911, 805, now 270, 449. You see that? So it shows you how the actual volume is being allocated. And it has the memory to store it right that way. All right. So every action and reaction, every volume or every purchase, it's being registered here for that volume allocation. All right. So that's why it's important. The next thing that I want to see is, for example, which of these areas has its maximum potential. For example, this one, it's 100% important. Just so you know, the percentages here doesn't match. They don't sum up 100. They just tell you based on the volume itself and the deficit. So to your left, you have deficit. All right, we're gonna be talking about this in a second. But to your left is the deficit or the distribution, or how I call it. I just forgot how I call it, but it'll come into my head in a second. The disparity. All right. Why? Because to my left, I have, and look at how big this disparity bar is at. It doesn't matches the actual volume bar because they are not related to each other in the sense that the more volume, the bigger the bar. No. The more volume, the bigger its own bar is in here, but it doesn't have to do with anything with this bar size. Why? Because to my left, it is just positive volume minus negative volume. This is telling me there is a lot of difference or a lot of buys and sells fighting for this place, right? So it may be micro buys and sells and stuff like that, right? But also look at how important that is, 18%. Whether then, yes, it has more volume, but also look at how many disparities are there. 1. So whoever plays this volume, one single entity did it. You see that? So this is telling me somebody with big amounts of money was able to place that order right there. This zone. You see that? Peak performance. Maybe somebody sold this candle. You see that? So there is a way to measure this. And please don't take it personal at all. All right. But there's two kinds of money out there. Smart money and the opposite of smart money. All right. Smart money is usually institutions. Why? Because they get together and they use all of their firepower together in combination to make a change in the charts. Market makers, for example. All right. And then there is the opposite of smart money, which sadly it's all of us, including me, which are retail. We all are all over the place, guys. Like, hey, I'm buying and you're selling and he's just doing nothing and the other guy is just losing money, right? And the other one is selling, buying because he can decide what he's going for, right? And he's looking at the 1 minute chart, right? He's just spending money on fees, right? So we don't get together and push all of our money, to one single direction. We fight each other. What happens is that when we fight each other, we start creating larger zones. What happens if I buy and you sell, and then another guy buys and another guy sells? We see a range, right? Are you saying virtual is? I'm not talking about virtual, man. Hey, JR, what's up, bro? Welcome. All right, so when I have big outstanding candles, usually it is a sign of not smart money. Let's call it dumb money, retail money, fighting over that place, right? Usually when we start seeing that, and it's not always the case, but we need to match one to another one to have a greater chance for it to play it out, right? It is big candles in ranging zones, all right? Then we are looking for very small disparities in reversal zones. We're looking these areas for in the past to react in the future. Let me give you an example here. Look at that. I'm going low. 1 second, please. Oh, I was muted. All right, I was muted. I got it. I still got you guys. All right, all right, all right. I think we can make this right. All right, perfect. I was saying that, guys, today's gonna be it for today. It's already past the time. Drew, I got you. All right. It's it's over. Okay, it's over. He says. All right. The point is that sorry about that. Tomorrow we're going to be going over just a quick overview, right? Volume indicators, because if we do predictive ranges, if we combine that with the VPVR and we combine that also with your dynamic reactor or SME combo, I think we can do a fantastic combo for trading. I think it deserves a little bit more of that practice, if you will, right? So tomorrow we're going to be doing just a little bit of overview, right, on the VPVR, the combination combos, and let's try to trade it in the markets. As always, we do live trading here, right? And then we'll see how that plays out. Guys, such a great pleasure to have you around. Thank you so much for that call out. And as always, guys, thank you so much for joining. And guys, see you afterwards. Thank you.